Brave. Trading view. Hey, Ian.
There you are.
How's it going?
Good.
Oh,
Who are you?
yeah, likewise. Doing well. Doing well. Did you want to share what happened, Audrey Lynn? You want to share what happened with Jay, or did you want to keep that one quiet for now?
No, I have no problem sharing that. So, Ian, I took your suggestion and looked online for oh goodness, I can't remember the name of the company. Brex Antiques.
Oh, Beck
Yeah.
Antiques. Yep.
Yes. And I saw that they have a coming soon to Rocky Mountain House location.
Oh, wow.
And just the guy's phone number. So I contacted him and made an appointment to go and exchange some gold, and did the transaction last Thursday. And he texted me later in the day and said, "Your gold is fake. Are you going to make this right?" And so constipation was no longer a problem, and I figured, like, oh my God, oh my goodness. And so I asked Paul for some assistance in this, and the fellow came over with his scale and testing equipment, and the test was inconclusive. So he used an acid test, and on the first, there was two, one for 24 and one for 22. Is that correct?
Yeah.
And the 24 showed positive, but the 22 didn't. And what Paul witnessed was that the fellow touched the sample with the dropper, because he uses these droppers of acid, different acids for different qualities of gold.
Yeah.
And Paul was very kind, and we talked to the guy about it, and he's like, well, I tested it on this device, and this is what came up, but it was really quick, and a quick test, and so I'm not really certain. And I'd already e-transferred the guy back his money, and he was very agreeable. So he purchased a new device. And what he found out the next day is that his current device was faulty. It was showing false positives or false negatives.
False negatives, yeah.
Yeah. And so then last night he comes back over and we test all of my metals. And my gold's good. My gold's real good.
Wow.
But yeah.
Was that Adam?
Say again?
Was his name Adam?
No, Jay.
Jay? Okay.
Yeah. And part of the problem with the second test is that he has a physical condition with his eyes that they don't stop moving.
Yes, I've seen that. Yeah.
Yeah, so it makes it very difficult for him to work with small things. One of them being that test. So yeah, it was quite the ride. However, he knows that we're honorable, and we know that he's honorable as someone that I would be willing to do trades with in the future.
Now, is he the guy from Rocky, or did he come in from out of? Oh, wow, very good.
Yeah, they're trying to set up a location here in Rocky, but they're having tremendous difficulty finding a place to rent or buy. I mean, there's a coffee shop, Copper Creek. They moved over the summer, and the owner of that space would rather have it empty than to rent it for a reasonable price.
Huh.
And he's come up against this with two or three other locations as well. It's quite crazy.
Is there a vacancy issue in Rocky?
House-wise, but business-wise, no, not so much. And in the walking around that we've done,
lots of spots,
we've seen lots of places that are available, but people aren't motivated to rent. It's crazy.
Isn't that interesting?
Mm-hmm.
So he has to work out of his home?
Yeah, his wife's not pleased about that.
Well,
Yeah.
did you get to go to the Leduc location? You didn't. Well, if you walked in there, well, all of their locations, you walk in, yeah, wall to wall. I would use the word colloquially junk, wall to wall junk,
Yeah.
but it's all um, stuff that I'm sure they've valued accordingly.
Yeah.
Yeah.
If it goes missing, not a big deal.
Well, no, I suspect that some of it is they paid a good dollar for, but who knows? You know what they say: one man's junk is another guy's treasure.
Yep.
Well, that's an interesting story, Audrey Lynn. That's crazy interesting.
Oops, sorry. Trying to get off this here. Sorry. Thank you.
Fair.
Thank you.
Yeah. No worries.
So yeah, that was quite the experience.
I bet
Yeah,
it
that was. And when the guy came in the first time, it was you could tell he was not sure what to expect. He was even hesitant to be friendly almost because he wasn't sure how this was going to go.
Yeah, he actually, it seemed as though he was expecting us to be aggressive and
Yeah.
no, my gold is good, it's fine. There's something wrong with your machine. Attack that's what he was expecting, was attack. And when we didn't, he was visibly pleased, visibly relaxed.
Yeah.
Oh, wow, good.
It was that presence, I think, that allowed him to feel that he could be disarmed and be okay.
That's good.
Yeah.
So he came to your home.
Yeah.
Oh,
Yeah.
wow, that's
Yeah.
unusual. Usually guys with, like, I know that at all the locations I go to for Bex, you got to buzz the door for them to let you in.
Which makes
Mhm.
sense. There's a lot of money and property there.
Yep.
And they only let in so many people at a time.
Mm-hmm. All right. Today we're going to be covering some discussion on gold. Gold is not going to devalue. It's going to remain as valuable as it always has been, according to its utility. How much can we use it? There is that perception that gold is worth a lot of money because it's gold. Look at how shiny it is. But there's actually a great amount of utility that gold has, and that's why we value it. Today, we use it in virtually every piece of electronics. Silver as well. Copper for conductivity. There's no question. It's good for transmitting. It's just too expensive to make wires out of gold. But a lot of the electronics have gold in it. The rise that we've seen over the last while in particular, and I say that's this last bit here. I remember when we did market analysis the day there was this spread between the close price and the open price. And, I can zoom in here on the 4-hour chart. We can see exactly how much of a spread there was. Or can we? Oh, no, it's only on the daily chart for some reason. There it is. This was the close of August 29th. The next day, Tuesday, because we had Labor Day, so it was a holiday, the price spiked up. It opened at a much higher rate. Now, that can happen, but it doesn't happen unless there is a great deal of force to make it happen. And I remember when that happened, it was, halfway through the day, I was talking about it at market analysis and saying, this means it's going to go up a lot over the next little while. And from that point, it did go up considerably. In fact, it went as high as 26% in that 48-day period. Now, this pullback that we have seen, finding now the price is below $4,000. That's a psychological level. It was not able to maintain $4,000 yesterday, and it has now dropped below. The close yesterday was at 39.82, and already today down again. Now, we are looking at things with great precision at the moment. We are zoomed in on the daily chart. But this is indicative of this is how the institutions traded it, knowing that this was going to occur. It's not that they don't want gold to go up, it's that they want control for when it goes up. And so what this rise in price was allowed to do was to get a bunch of people all excited. I have had more conversations about gold over the last month than in the previous year with people. New conversations are about gold. What does that tell you? It's all the greedy people who have increased their interest, and by searching online even, they are able to determine at what point are the greedy getting in, because we need to drop the price some. This here, I think, is a bull trap. I think we're going to see gold actually come back down and possibly even retest this. Why? Because it wasn't even able to withstand $4,000. Now, I could be wrong. This could be a dip and that it's finding support and will continue to rise. But support, even on the Fibonacci level, again, that's not always everything, but this is the Fibonacci level here. It didn't even come and test that yet. And it would make sense that it would come and test that because there was a pivot point right there. That pivot point lasted only 3 days. And this was the last pivot point altogether there, just as it was crossing over 4,000. And if today it can't stay above 4,000, if it doesn't close above 4,000, that indicates to me that we're going to for sure be testing this line, and possibly, because there was no other pivot point. There was one here, 36.70. There's a pivot point there, but then before that are the 2024 guys. Now, why would this occur? Because, again, it's about liquidating. It's about taking money out of the system and putting it into theirs. This is what we're probably going to see occur many times as we go up this run. So gold isn't going anywhere. It's being manipulated just like every other asset. In fact, what's interesting about this, during this time, in order to give people a little bit more of that fear to drive the price down further, what has occurred is that there are distributors, larger distributors, who are saying, we're not going to be fulfilling orders on gold and silver. We have the gold and silver, but we're not going to be fulfilling the orders because it was too chaotic. That's already the talk of the town. Silver right now is especially getting a squeeze where dealers are not wanting to deal with silver. When that type of fear actually starts driving the price down, similar to a bank run, and it would take a bit for it to get to the point where large institutions are ready to buy those contracts back up again because people shorted it. Again, we're dealing with the contract stuff here. People who are getting physical gold and silver, disregard this. The reason I'm bringing it up is so that we recognize the manipulation. This manipulation is the same manipulation that they have anchored and built into the cryptocurrency world right now. And with this transition that we're seeing right now, where people are being corralled further into digital ecosystems with digital identifiers, especially as there is now the capacity for machines to create content for people at their command, they want to make sure that all of this content, all of this data is controlled. So the transition from real world assets like gold into digital assets is very real. And so as a result, there will be a time where the price of gold will decrease, not because something is terrible happening. But remember, gold maintains its purchasing power. So when we see it drop, we need to remember that the reason why that is because there's more investment going into the dollar. There's more faith in that economy than gold and silver. We know it's not true. We know that the physical asset will reign supreme, simply because even for the digital world to exist, it still requires gold. So the demand for gold will be sufficient that people will be able to appreciate the gains. But that if it drops, it's because there's a large group of people that are still very much following that old world news, the mainstream. And they will become fearful of what gold will do in the long term because they will see the opportunities being brought up elsewhere within the digital realm. Now, aside from that, there's a second reason why I believe it will continue to drop. And that is because we go back to how things happened in 2020. It rose from a price all the way. The low was from 2016. That price drop, or that price was $1,045 or so, somewhere in there, 1,050. The low actually was where was that low? The low was 1,047. And for a period of time, it went up 62% across 1,500 days, and then COVID. Now, COVID was not an all-time high. The all-time high actually was back in September of 2011. So before COVID, this was about a 5-year high. Is that right? No. When was the last time it was that high? The last time it was that high, was December 2012. And then it dropped suddenly. And that was because of COVID. Whenever there is a crisis, people run to get cash and they will sell things that can turn into liquid quickly. So that crash there, that gold crash, we call it, was a drop of just under 15% in total. And then it continued to rise, and it did quite well for the rest. It never saw these lows since. But after it went up, it did come back and rest, find support at those previous highs. These previous highs have not been retested. And so I believe that if there was to be a crisis, look at that, coming down 13% from where we are right now. This is entirely possible. This was wonderful. And you know what? We were just talking about selling high, buying low. If you have some gold right now, you may want to buy it at 10% off to 15% off in a little while. So you may consider selling gold and then buying that same gold back again for cheaper. Simply because Whether it happens now, whether this squiggly line that started continues to drop and find support back at $3,400, $3,500, whether it does that, or if it continues to rise and we see that spike, you'll want to be ready for when it's on sale. Now, again, the longevity of gold is still going to be there. In fact, I would not be surprised if gold does go to $30,000 to $40,000 an ounce, simply because of inflation. Simply because of inflation. But that the drops are all going to be the traps that they're going to want to get people into. And the crisis itself, the thing that makes it where the next phase of this great reset is brought into action, where more and more people are coming online. Remember, happened in COVID. Zoom became a household name. Same idea here. We're going to see a crisis that necessitates the onboarding of more digital IDs. But this time it'll be more serious. Last time it was just for health. This time it'll be for passports and internet access, that kind of stuff. And, we're going to be ostracized if we don't comply. Just like, oh, you can't go to the restaurant because you didn't get the vaccine passport. The language will be different, but the terms will be different, but the language will be the same. Coercion and duress. That crisis that necessitates the justifiable, what the people will say is justifiable coercion and duress, that will mark the next dip to buy, and then we sail on to Valhalla pretty much for the next 2-3 years. And I think it'll happen. I think it'll happen between gold and silver. If gold was actually going to be something that America wanted to have backing its dollar, the Genius Act would not have allocated only 5% of its treasury to gold. They are using more cryptos than gold to back the dollar. That's under the new Genius Act. So, if that's the case, then we know they don't have an intention of gold going up, that they actually want to bring it down. It will go up because of the way that it works. This is the beauty of gold, is that it defies edicts. And where am I going with that? We have to be aware of the manipulation that's occurring. The fear that is already set in as a result of this price drop has made it where people are actually going into cryptos, where people are taking because the institutions know, and they have been planning for this, to move, all of these markets. US 30, look at that. 3 days in a row, new highs. There's no reason why it should be doing this. The math does not support this. But you know what does make sense? The Bank of Japan and the Bank of America have now both been adding to their balance sheets. They're doing quantitative easing again. They're just printing. They did quantitative tightening. After all of this nonsense. Let's go to, here's COVID. So they did quantitative tightening because they didn't want inflation to run away on them. But then this here, they're going to have to raise the interest rates, or they're going to have to print to oblivion. Either way, this is just destined for a collapse as they bring these old assets and the classes of assets, as they bring them into the digital fold. They aren't going anywhere. These companies are not dying. They're just leaving Wall Street and they're going to blockchain. That's what they're doing. And the people who are in this, who are still following the mainstream, where, even though the Powell has said, no, we're going to have to raise the rates. So it's 96% pretty certain next month the rates will be raised. That automatically makes it where now quantitative easing is going to have to occur. And that will give people that impression of those old assets that that they're going by the wayside. Gold is going to be one of them, and the US markets are going to be the other. People are going to be gravitating towards blockchain thinking that they're saving themselves when in fact they're just walking into the same fire in a different furnace. The chart to watch is gold because it gives us that indicator of what is the emotion that people are experiencing. This here was a high. If people were calling me more so, having conversations with me more so about gold over the last month or so, it's because of this. Not because they already knew it was smart to get gold. They just didn't do it. Now they're doing it. So because that's the emotionality of people, we can bet our boots that there's going to be a drop here to scare all those people, to try to shake them out of the market and just take their money and transfer it into other assets. That's the game plan. Knowing that's the game plan, go ahead and buy, but don't buy all at once. Buy it in increments as the price comes back down again. Questions?
And you buy, like, if as it comes down, your first purchase would be smaller than your second purchase in terms of dollar size, and then and further on down, right?
Absolutely. That is the most effective way to dollar cost average, is increase the deposits as it goes down so that you're getting a lower price per average. Some people don't do it that way. It's maximizing the price action by doing
Sure.
so.
Yeah.
Some people just do it, 250, 250, 250, and that's still okay. You are lowering your average cost every single time.
Correct.
Just not as much. You do treat, especially these kinds of charts, you treat this like there's a sale down at the Costco. Oh, look, we can get 2 years of toilet paper for a year's worth of toilet paper. and so then you buy.
Yeah.
That kind of mentality is really the way to look at this. As it goes on sale, just buy as much as you can, knowing that will, as 2-3 months after the crisis, it'll take a couple months for it to recover. And that's okay. When it recovers, you'll be so glad you dollar cost average while everybody thought that you were an idiot. Like, again, let's go. This is gold. Go to the weekly chart. I remember I was the idiot that bought scared. I bought scared that I was missing out in the last half of August of 2011. I bought at a super high. I literally did what people this last week have been doing, inquiring about gold. They simply responded to the last little impulse. Woo, look at how fast it went up. I did the same thing. And I bought at this terrible time. But then I dollar cost averaged my way as it continued to drop. So even though I first bought here, my average price was, probably around here, 1,400. And I bought as long as I could. And every time I bought, I just made sure that position was larger. So the majority of what I bought would have been averaged, 1,400. Whereas when I first started, it was high, right? It was super high. So I bought as it went down 30%. And the same thing is happening now. Go ahead, buy. It will go up, but just recognize that you may want to do what I did and dollar cost average a little bit so that your money can make that extra 50% before it begins to accumulate. This is just coming back to those old highs, 65%. Just coming back. And then, COVID happened right here. That was COVID. That little tiny little yellow circle, that was COVID, and then accumulated ever since. This chart here is like a master class in market analysis. It's so good, so beautiful. Everything that we've seen since COVID, okay? Everything we've seen, because COVID, after COVID went through, we formed these highs. These are triple highs. That lasted all the way till May 23rd. This is what you call, this area here, this is what you call market recovery. Because this drop here, this is a loss. So the next box, the next section is recovery. It recovered, and ever since those highs, this is 2000, this bar there, the high was $2,047. We haven't seen that price again. And we might see it again. The point of the matter is, everything since then is called accumulation. Well, whenever there's an accumulation, here are previous highs, crash, accumulation, it comes down again. Look at that. It even comes back to test the same level that used to be the high. Okay, this used to be the high, and we have not come back to retest it. So that is why I'm saying, like, people need to be careful. This is all accumulation right now, all of it. That needs to be challenged in some way, shape, or form.
Can you define accumulation?
Yes, accumulation, that would be the box that extends above recovery. So here's the recovery zone. That recovery zone even lasted up to here. And this is labeled pre-2024 highs, because that's as high as it got throughout 2024. Once it got past that recovery zone, because that's all this was the dark night of the soul during Biden's administration, where everybody thought that the entire world was going to collapse because of how bad his policies were. Things recovered to how it was there in September of 2011. That is all this here. Oh no, that wasn't. This was 2016, right before Trump. So Trump comes in and things come back up. This is where things went dark night of the soul for Biden, September 2022. And then this is accumulation. So depression from 2011 down to 2015, end of 2015. Everything since then is recovery. And everything since recovery has been accumulation. And there's not been a challenge. It has just been rising and rising and rising.
What would you call the period between recovery and the moment the accumulation started? Because there was right.
Yeah, this here,
yeah.
Technically you're right. This high here, that makes it the recovery. This here is called consolidation, where the highs and the lows don't really move much. The market structure is maintained during that section. I should make these colored so that they're a little bit, I'm going to take the time to do that because it would be a good screenshot. So consolidation, I'll take out this 2024 highs because that is now pretty much self-evident. Welcome back, Audrey. Come on. There we go. Background. Let's give it blue. This one. there's the text. There we go. So this is recovery. And the style for this one, let's give it green.
Red.
Yes. Market decline. And then from
yeah, I was thinking of red for the other one. Yep.
Oh, red for accumulation?
For decline. No. For
oh,
decline.
yeah.
Yep.
Yeah, okay. So this is all accumulation. Accumulation is almost as big as recovery. Oh, no, it's bigger than recovery right now. Oh, my gosh. Market structure would tolerate a $2,000 ounce, folks. That is a huge drop. That would do it. That would get everybody into digital realm very quickly. Oh, market structure would tolerate that. Now, I think that we'll probably test 3,300 and that the free market, the rest of the world is going to take over. Okay. Market structure would tolerate this. If it did this, you can bet your boots that the other nations that have just bought gold, China over the last 5 years, China has increased their gold reserves by 10 times. They are not going to tolerate that kind of a crash. If they see that, they're going to announce on the world stage that all of the energy contracts are being renegotiated to ounces of gold, period. That's how that's going to go down if that much of a crash were to occur. If gold comes down and we end up seeing this 3,500 range, that will be the support to bring everything online. I believe that there are enough people outside of the American ecosystem who have granted they've got their own version of the Matrix programming telling them what to believe. I get that. But that this here, the other nations would not tolerate having gold drop below that. They would pull the plug, renegotiate energy contracts. Oop, that's not decline.
What would happen to the price of gold if that happened?
Who knows? It's not going to be denominated in US dollars, that's for sure. They'll probably just find, well, BRICS, for example, that's a basket of currencies, and they are all in energy contracts together. So that one there would make sense to me that they would issue a CBDC of some sort backed by the energy contracts. Because that's what gold is going to be used for. Gold is going to be used for trading in that, and then of course, in electronics and stuff like that. The gold that's in electronics, though, the countries don't care about that volume. It's like for them, it's like, yeah, that's how the economy works. We've got to have some gold for electronics, but that the energy contracts between nations, they are going to want to back that with metals. Why else would they be accumulating the way that they have been? Russia, right before COVID, Russia made a $600 billion commitment to buy gold from China. So yeah, they know what's going on. This accumulation is dangerous. It is very clear just how much inflation truly has been. This is how you measure it. You don't measure inflation based on what they say, 8%, 4% per year, and things got kind of bad during COVID where we went up to 8. No. Over the last year and a half, this is February 2024. February 2024, gold has doubled. There's your inflation rate. And that's all accumulation. It's all fake. None of it's real. Nothing I talk about is real. It's all just paradigms and beliefs. And remember, it's the nomenon versus the phenomenon, folks. The nomenon is what happened, and the is what we put in front of it. Questions? Does this make sense when with the colors the way they are here? Can you now see just how fragile all of this is?
What do you anticipate? I've heard from, I can't recall who it is, but that graphene will be used possibly as even a replacement for gold because of its conductivity of electricity.
Absolutely. 100% in 2013, when I first heard about graphene and what it was capable of, I was excited for that. The problem that they're facing is stability. They can do it with machines that are stationary, easier, but it still has to be like a, $20,000 table that doesn't allow for any movement. And the reason why is because graphite is what is that's the main material to create graphene. Graphene simply references the state in which the graphite is, which is a two-dimensional surface, one molecule thick. So that nano layer, that's what this is nanotechnology basics. That nano layer is unstable because it's graphite. Graphite is already, like, we use it for pencils. It's not a very strong material. So when it's like in that state, what they were having, because they wanted to layer it so that they could make batteries and all these other things, and data transfer as well. So it is a capacitor, it also is a conductor, and it also can store memory. So it's hugely versatile, even more so than gold. The drawback is because of its how rigid it has to be and how much the material doesn't support the rigidity, that the plates touch whenever it gets jostled even just a little bit. And so theoretically, graphene has the capacity to completely revolutionize our electronics, and I think that it will. It just boils down to, how do we suspend these things in such a fashion that it is capable of doing all of these wonderful things that it can only do on a table that is, laser leveled and precision focused on having no movement at all. Like just the slightest movement can disrupt that. Disrupt that matrix of graphene. So it really boils down to, when are they going to make it so that it's more stable? I still think, though, gold, look at what else gold can do. Gold, you can lace gold in windows. You can have a fine dust blown in between panes of glass. And that fine gold dust will actually provide that glass with, and I can't remember what the math on that is, but it's exponential R factors, more so than just the panes of glass. You can get the greatest, heat shield technology into glass, and it still will not outperform gold. So I think, especially with 15-minute cities, that we're going to see gold be used in windows. Why? Because the government is going to have to pay for all that electricity soon. And they're going to want to get it cheaper. And if they don't, we might as well, because it's a good idea. And that's another use case for gold.
So is it possible that you could consider the accumulation, that top accumulation section that you have there, to end at April 23rd at the little plateau there just below it?
To drop down back to this area?
Nope. Up higher, next level up.
Next one.
Nope, next one.
This one.
That one there.
Yeah. Okay. So this,
So,
from from June. This was May when that high first came into play.
Yeah.
Yes, definitely it'll come down to here. If it dips further down in the same movement, I believe that would trigger an international response.
I suppose my question has more to do with, looking at the colored blocks that you have there. Could your accumulation, like they're fairly lengthy in time frame, like from 2012 to 2016 and 2016 to 2020 and 2021 to 23, 24. And what determines the size of those kind of blocks? Like what I'm thinking of is if you took the top of your accumulation block and brought it down to that last plateau,
Yep.
and then consider up above there to be accumulation. So
I see.
So that would be recovery. Now accumulation would be recovery, and then
Yeah, I see what you're saying. Yep. And the reason why we wouldn't do that is because for it to not be accumulation, we would need to see we would need to see a drop to test a previous high. And we have not tested a previous high since, right? So the previous high is technically here because we haven't tested it at all. On a more minute level, like if we zoom in, that's the weekly chart. Now I'm zooming in. This is the 4-hour chart. Even on the 4-hour chart, we can see that since this breakout here, August, it tested this, but that wasn't a previous high, that was a previous low. Right. Went up again. This is the first time that we've actually created a low.
Right.
Since October.
So the fact that it's gone down below that October 9th level.
Yep.
How significant? Now it's gone down, but then it's bouncing back up. How significant is that?
This is very insignificant. Again, we're zoomed in on the 4-hour chart. When we're looking at this from the perspective of a crisis, it's advantageous for us to look at the weekly chart. The little micro movements that occur within aren't signals. These are simply the oscillations that we would normally see. Now, if this stays above, if we go to the daily chart, if it stays above this and we don't stay below 4,000, we may be going for another push. We might be going for another all-time high. And that might be all we get for a retracement. So just because this drop is happening now, and that I believe they are going to want to get the last that little last spurt of people that are getting excited about gold, I believe that they would want to demoralize them a little bit more. That's just what I expect. But it might not. We might already be way too far gone for them to continue this kind of manipulation. And we see this drop that just happened now, that's 11%. That's almost as much as it dropped after COVID already. It could very well be that that's all it is. And then we have confirmation, but we won't have confirmation of this being a low for another couple of days. It's just because we see this momentum already coming down and not able to stay above 4,000 on a Tuesday. That's telling.
Okay.
That's telling to me. That's telling. If we'll know more. We'll know more tomorrow. Tomorrow is going to be a big update, because if it comes back up again and into tomorrow stays above 4,000, I'm going to say we're going to be going up. We're going to be going higher. The weekly chart, though, hasn't even, like, we'd have to wait another week for us to know whether or not we've even continuing to come down here. These two bars, these last 2 weeks since the all-time high, they are inconclusive. That it's coming down to test something, but on the weekly chart, the next thing to test would be here. That's another reason why that accumulation is really this tall, because we haven't tested a previous high since March of 2024.
Well, good.
It just keeps rising. And that accumulation, yeah, like look at recovery. Let's measure this. Recovery went up 91%. From its low, recovery grew 91%. Since March 2024, accumulation has gone up 107%. So accumulation, oh wow. This is a precarious situation. The amount that the market has expanded since recovery is greater than the recovery.
In less than half the time.
In less than half the time. The decline from 2011, which I think we're due. I think we're due for that. That was a 43% drop. If it was 43% drop from here, 43 brings us to there. Deep within the accumulation zone. This to me makes the most sense. If we're going to be going up higher, I believe we will, but that a crisis would bring in a drop in price to this point here. This to me would be what the international community would call the US bluff and be like, no, not only are we now doing energy contracts in gold, we are refusing to use the US dollar as a means to measure the value of gold, period. You're out. And we've got our BRICS and everything will. This is one guy that I follow, and I do respect his opinion on the matter. He believes that there will be a migration of Americans, Canadians and Americans, a migration to China, simply because it will be so much better off. Even with their political garbage that they have to deal with, it would still be better than the Americas. That's what he believes.
You mean a migration of people or a migration of wealth?
Both.
Wow.
If we just take last night, I had a meeting with the Dragon Riders, and I was sharing with them the latest development out of China and their computer chip manufacturing. They have come out with a chip in fully tested and everything. It is approximately 2 times as efficient as NVIDIA chips, which are the state of the art. Everybody goes to NVIDIA. You want an LLM? You're going to need NVIDIA chips because you need that processing power. These chips are twice as powerful as NVIDIA chips, and they consume less than 30% less electricity. So you have computer chips now going into computers. You can bet your boots that I think America would make it unpatriotic to support Chinese technology. That's what I believe. I believe we're going to see the language patterns teach people that Chinese technology is to purchase that would be unpatriotic, and that you're actually insulting your heritage if you get Chinese chips, I think. Because that's how powerful these chips are. If they are able to do what they say they can do through this report, within the next year to 2 years, we are going to be able to buy computers that are twice as powerful as the most recent model for less money. Why? Because Intel computers use what are called ASIC chips. That means application specific. Corey, you know about that. Intel computers primarily use application specific infrastructure for you to listen to your music. You want to browse the web? Great, awesome. They are all little tiny chips inside your computer that work, they work together, but they are application specific. And so they actually consume a lot of electricity to, when you go and click a button and the computer starts to work, it actually consumes a lot of electricity because it's application specific. This new chip that's come out is allowing people to have cores of computer chips that are no longer specific. They are generalist. Why? Because the LLMs can now create your applications for pushing play on your music. We are moving away from this idea of having an operating system that is the same for you, Ian, as it is for me. Corey uses Linux. I use Apple. Ian, you use Windows. This world is disappearing very swiftly. We are moving into a decentralized digital universe where, Ian, you are going to build your own operating system. And you're going to do so interactively with the computer that builds it. That computer chip would put a nail in the coffin of everything that America has worked to build in preparation for the Great Reset. It would be the nail in the coffin to America if it can do what it says it can do. When these roll out, we'll find out once we start using it. Yeah, think about that for a second. Imagine, it's like, I would like to have an operating system that allows me to 3D print my own tools in my garage. You will be able to do that with those computer chips using general LLMs that also, the models of LLMs coming out of China are also more efficient and they can be run on smaller machines. You amplify that yet again with generalized chips. Makes you wonder, what do they have up their sleeve? Why are they giving the people so much power digitally? What do they have up their sleeve? Because we all know the internet was given to the people from the military because the military, they thought it was obsolete. So they gave it to the people. If China is giving away LLMs that are reportedly conservatively estimated to be 100 times more efficient than the legacy LLMs that require data centers that cost $5 million to build, if that's what China is willing to give to the people, what do they have? What do they have to maintain the power and control? Because the amount of freedom that humanity is getting through such technology, that makes globalists irrelevant. Again. And if you read The Art of War, you'd probably, if anybody who has read The Art of War, they would know exactly why I'm saying what I believe to be the case, because China has followed that game plan from that book to the T for the last 50 years. America hasn't.
How much does this story of gold reflect on silver?
Well, silver is supposed to be based on supply and demand because it's 8 to 12, depending on the season, depending on the year, basically. It's between 8 and 12 times more abundant than gold. Of all the metals brought up, there's usually 8 to 12 times more silver than gold. Minted and in production in the world. So silver is supposed to be right now, if we were to take the average 10%, silver should be $396 today.
Right.
And it sits now, and that's US, of course, it sits now at $47. And it was before this last big spurt there last year, 2024, silver was less than 1% the price of gold. So now it's taking less silver to buy the gold. That's an important marker. I think we're going to see that trend continue, and that the story will be that, you know, if gold, due to inflation, goes to $40,000 by rights, silver will probably be around $4,000.
Is it much easier? Well, generally speaking, it's easier to complete transactions with silver than with gold.
Absolutely.
But to right now, it's what, 1 ounce takes 85 ounces of silver to equal an ounce of gold at the moment. So, you know, you multiply that in terms of volume, and you get a huge. You're going to be carrying your silver around in 5-gallon buckets.
Yep. I'm going to see if I can actually pull up XAU XAG. Doesn't look like it, but it would be awesome if I could find that one. I would love to see silver against gold. Good questions, by the way. Yeah, I'm not seeing a chart that I might have to build this chart. That sometimes happens. Let's go ahead. Silver, let's go to the silver chart and see if I can build a silver against gold. Nope. I cannot select that as a currency. Wonder if there's a gold silver ratio. Here's a chart from silverbullion.com. That is what would be a good chart to follow. And I don't see the chart. I just see, oh, there it is. This is an interesting chart. I'm going to bring it up. This is very interesting. You can see how yeah, this is cool. Oh, let's go like this. Main stage. There we go. Current gold to silver ratio is 83.9. And following the 80-50 rule, so that's where you are going from 80, you're switching into silver. And if it's below 50, you're switching into gold. If you were to do that, you would have multiplied your holdings by 4.23 times since 1985. That's a cool little way. Look at this. There was the peak way up here. Gold to silver ratio was 112 in 2020, March of 2020. Amazing. I love charts. All right, that's it for market analysis for October 28th.